But Kenny, the market is pricing in another rate hike in November. You're saying that there could be more?
I think there's two. Now, Michelle Bowman, who's a Fed governor, came out and she's calling for multiple rate hikes. Multiples, more than one. And I think, and I've said this all along, that I think they want to get the Fed fund rates to 6%. That would be two more 25 basis point hikes, right? And that's where I think she suggests it's going to go, and that's where a couple of other Fed heads have suggested they want it to go.
Kenny, but I suppose the thing I want to ask you is, because in terms of everything you're saying about utilities, absolutely correct, absolutely spot on. You invert the 10-year and you see that correlation playing through. But why is it only really utilities that we are seeing that realization of that concept? Because, you know, you look at the valuations that are being for, you know, your Mag 7s, for even some of the other stocks, and it doesn't align with, even if you're doing some basic fundamental risk-free on where they should be sitting.
I think you're going to start to see it roll over. I think you're going to start to see the other sectors follow in line with what the utilities are telling you and what the bond market's telling you. I don't see how the rest of the market can really stay as elevated and not have more of a severe reaction. And I don't think necessarily, I'm not calling for a crash, but I am calling for a repricing. There has to be a repricing of multiples. You know, 19.8 times is what the S&P was trading at just a month ago. In a rising rate environment, in a stickier inflation environment, didn't make any sense. The market is now coming, I think, to that realization. Bonds are saying one thing, utilities are confirming that. I think you're going to start to see it roll over in other parts of the market, and certainly those sectors that have so outperformed, right? Consumer discretionary, communications. I think you're going to start to see those peel back.
Tech, the technology sector. What happens there, Kenny?
Well, and so tech is right up there too, right? It's up 30% or something. Tech is going to also follow in suit. And you're going to get, you know, the big tech names will come under pressure, Apple, Amazon, Microsoft. But you know something? Those names are going to come under pressure because asset managers will use them as sources of cash, like an ATM. So they're not going to be knocked down and be down 10 and 12% because there's something fundamentally wrong. They're going to be down 10 or 12% or 15 or 18% because asset managers just need to raise cash. And that will be the opportunity for the long-term investor is to jump into those names when they start to break down. And I do think that you're going to start to see them all, you know, they're going to see the broader market start to pull back. And we've said this, we're in a seasonally difficult time of year. October, as you know, can be vicious. And my feeling is that we're going to see more volatility, at least going into earnings season, which starts, you know, next week, right after we get the CPI and PPI, which I think is going to show inflation rearing its ugly head again.
There are so many things that, you know, could influence the path higher when we're talking about duration, right? You know, you've got the BOJ, you've got all of these other factors, basis trades. Pick what you like, but how low do you think, because, you know, you're calling maybe, you know, 5, 10, 15% retracement. How low does the S&P go in your mind before you start to see all of these marginal buyers, all these people that have been parking in money markets saying, hang on, wait a minute, that's too cheap? Where do you think the bottom's going to be?
So here's what I think. I think 4,200, which is the 200-day moving average, right? I think it's going to go there and test. Here's going to be the issue. If we go there and test and the buyers are standing there defending that position, that will suggest that, yes, that's it, that's where people think valuation should be. If we get there at 4,200 and it's not sure whether we're going to hold or not, and the market pierces 4,200, all that's going to do is send a signal to all the smart logic algorithms that the level failed, which will start sending a wave of sell orders back through the system, and then we could see us go down to the, you know, the 40, 50, 4,100 level. Although I don't think it's going to do that. I think 4,200 is going to be the level where it holds.